The flights are in the air. Could this be the beginning of the end of the short silver squeeze? Well, we're not sure yet. It's a question we won't be able to answer for a little while, but we're seeing signs, and that could mean lower silver prices. Let's talk about what happens next in this scenario as we explore. Part of me was hesitant to make this video because I don't want to just come across as a contrarian, or and I also don't want to be just a cheerleader either. I want to be as realistic as possible with regards to silver prices and the market and where silver is going to go. Most of my bullish calls have been relatively, subdued compared to some others out there. Nonetheless, it is exciting to see silver do what it has done, but there's also a lot that we should take into account, and silver market is complex, so we have to keep in mind that as well. But one thing is for sure, everything that's happening now is temporary, but as to how long it will last, well, that's another question. Well, my friends at Summit Metals, they know this all too well. They have their own YouTube channel where they talk about analysis in the market, so check them out, but also check out their website for other deals, for great products out there, and experience their great customer service. The link is in the description of this video below. Now, the Daily Hodl is reporting that the flights are on their way. The annualized cost of borrowing the metal, silver, in the London market known as the silver lease rate skyrocketed more than 30% on 1 month basis in the past week or so, making it extremely expensive to roll over short positions, according to Bloomberg. And this historic short squeeze is propelling the price of silver to new highs. It's part of what's happening here. There's other factors too, but it is certainly contributing big time. So we know that the short squeeze happens when traders who borrow an asset at a certain price in hopes of selling it for a lower price to pocket the difference are forced to buy back the assets they borrowed as momentum moves against them, triggering further rallies, and that's what we're seeing, even as a recording of this video. Although there's a slight pause right now in overnight trading, silver dipped a little bit, but is now picking up slightly here as the evening goes on, and who knows what it's going to do by the time you watch this video. It could continue to rise up. We could see silver creep up to close to $55 an ounce by the time you watch this video, but that does not mean that the signs aren't there. I'm starting to see them as I've watched the markets move in trading here in the past 2 days. In other words, we're seeing gold move up much higher than silver, and silver pause and hesitate. And with the gold to silver ratio trading at over 80 to 1 right now, this means that we could start to be at the beginning of a plateau, or at least temporarily plateau in silver's price. Silver's big rally may continue into next year, according to the Daily Hodl, and the bank analysis from Bank of America also thinks that's going to happen, as I've talked about, and they think that we could see it rise up to $65 an ounce due to several factors, including market supply deficits, which could persist at least to some degree next year. Silver's rally follows gold's massive rally this year, and other metals are also on the rise, including platinum and palladium. But what's happening, though, is we're seeing people start to booking flights, cargo slots on transatlantic flights for silver bars, an expensive process that's ordinarily used for gold. Silver is usually transported by ship, but there's a massive shortage in London, so they're moving to capitalize on this higher price. And this is starting to happen. The flights are taking off, and we're seeing the backwardation between the futures price and the spot price, and that's contributing to all of this. And so that's what we're looking at here. And but Goldman Sachs analysts are warning investors that the price of silver may have a sudden correction, and that's something I want to warn you as well, because if we start to see the London vaults start to get filled up from the COMEX and other places here in the United States, that is a sign that we have less stress in that space. And that's where most of the stress is in the London market. So if we see that start to subside a bit, well, then the price could fall back. And we started, again, as I mentioned earlier, we started to see signs of that stress easing, at least to some degree, in the price, moving back and correcting a little bit. And so that's what we're going to look out for. And so I would not be surprised if we start to see deliveries come into the London market, and reports coming out showing that indeed they're starting to increase their vault holdings. And there's not going to be that stress and strain, and backwardization may narrow. It already has started to narrow. Josh Fair, the CEO of Scottsdale, has recently done an interview with Sprott, and he mentions too that we could start to see things subside a bit and then pick up. He says it could easily turn around very, very quickly. And so you got to be prepared for all scenarios in the silver market. We have been spoiled in 2025 as the price of silver has now breached record highs nominally. We still have a ways to go, and the gold to silver ratio is abnormally high for various different reasons, which I'm not going to get into on this video. But it's a sign, folks, that the gold to silver comparison and that ratio and how these metals are viewed are quite different these days. That's what's so amazing about this rally compared to 2011 and 1980, where silver was ruling the day compared to gold. In this case, it's not really been that way for the most part. This rally has happened with the gold to silver ratio above 80. In fact, I don't know of a single time where it's dipped below 80, and that tells you that we're seeing two different markets unfold. One thing working in silver's favor is the increased demand for the metal in industry. That is something that is not subsiding overall. In other words, for industrial applications outside of the paper markets, is something that is going to continue to add stress and strain, which means that I think that if we do see a correction in silver's price, it's not going to be by that much. In other words, I don't see it falling below $40 an ounce, honestly, at this point. I would be surprised if it's anywhere below that for the support in the long term or medium term. But nonetheless, most analysts believe that because of the fundamental factors that are outside of the geopolitics, outside of even inflation, that silver is looking good heading into next year and the year after. And I believe that have entered a new age for silver, and that age for silver means that support is going to be higher, which means that silver will prove itself, I think, as a hedge against inflation and economic instability overall. And that hedge against inflation is one of the biggest arguments for holding precious metals in the first place, and one would have a hard time making that argument before 2019, although it could be made, and I've made it. I think now we're starting to see the solidification of that as we continue to experience inflation and other factors. But what we're seeing now is unique, in many ways different from 1980 and 2011. But it could correct, and it will correct, I think, in due course of time. There's normalization of markets, but it may take a while. Josh Fair, again, has mentioned that it is quite possible that it could persist for some time or worsen, especially as prices continue to increase, causing further panic, in a sense, in the silver market overall, with the rush to get the silver into the vaults of London and others. With the dislocation not only between gold and silver, but between silver itself. And that was what we're seeing here. Not all silver is created the same. That's a lesson that I've learned through this bull run. No question about that, and it's going to continue. But we also have to understand that silver's rally follows gold rally big time this year, but again, pretty much at the same pace. Other metals are also on the rise that we're seeing, and a lot of that has to do with government shutdown, Fed rate cuts that are coming, U.S.-China trade tensions, and the war in Russia and Ukraine, between Russia and Ukraine, which, by the way, there's now going to be back to the negotiating table, and that is going to be another factor. If there are some positive developments there, then that could cause the price of silver to fall a bit. So a lot of things to consider here that could cause silver's prices to correct in a big way. In other words, below $50 an ounce again. That is something that is quite possible. Even though we've seen it above $50 an ounce for a number of days now, this is unusual territory. Now, will it happen? I don't know. Could it happen? Yes, it could. Should we be prepared for that eventuality? Yes, we should. Should that dissuade us from stacking silver? No. Should we hold on to our silver? I think yes, for the most part, no matter what. Having wealth outside of the system is crucial here. So that's why I'm holding silver. I'd rather hold silver than too many of these, even though I do agree with having some of these mainly in hand to protect this. So I hope you found this video informative, insightful, and educational. I strive to bring you the latest news and analysis in the world of precious metals. So with that, I'd like to extend a multitude of gratitude to you all for taking the time to watch, and to encourage you to please rate, share, comment, and subscribe.